Good evening. This is Jamie DeLugash with the Thursday night Millionaire Blueprint Accelerator video recording. Once again, we are recording tonight's presentation. And instead of doing a live webinar, as always, if you have questions, you can reach me on the Gmail Millionaire Blueprint email address. So once again, this is Jamie DeLugash with the Millionaire Blueprint Accelerator. I have a short presentation tonight. End of May selling is on the horizon, and we have some actions to take in our Millionaire Accelerator portfolio, as well as just a short review of the positions and where we're at month to date. I'll also go over a little bit as to my expectations for June tonight. So the action to take, because this is the end of the week before Memorial Weekend, and the playbook this year has been for institutional and hedge fund managers to lock in positions at the end of the month, not to mention the fact that it is sell in May and go where we have a few more trading sessions remaining. We are going to close all remaining long positions, do that tomorrow morning. Wait for an hour after the market opens, so that would be 10:30 Eastern time. Sell all long positions. We're going to keep our shorts open until next week, again, because my expectation is for a little bit of selling to take place. No guarantee, mind you, but just positioning wise, this is the, I think, prudent course of action. And so that'll leave us with a handful of short positions. Once we lock in and close those long positions, keep your powder dry, and we'll get set up for the month of June. Basically, next week I'm going to be rebooting the portfolio, doing a new PE gap run. Honestly, not really sure what to expect. This has been a tricky month to gauge with some very specific tendencies. With bond yields going up and the dollar actually weakening in value earlier this month. Certain stocks have benefited, and frankly, there's been a little bit of irrationality. It's been a bit of a junk rally, as evidenced by the performance of our short positions. You can see a number of overvalued stocks with very low profit growth expectations have done very well in the month of May. And even though that can happen from time to time, I don't really expect that to be a long-term occurrence. So anyway, won't really know the construct of the portfolio for June until I do run the PE gap. And when I do and make the selections, I will bring them to you live next Thursday. Next Thursday will be a live webinar. It'll also be recorded, but it'll be a live webinar where you can join me, ask questions about the new portfolio, ask questions about the previous month, or any questions for that matter about the market, my expectations for the economy, what have you. I think it's going to be a real interesting, choppy market to be in here for the next month or two. So with that, let's talk about the Millionaire Accelerator portfolio. So far, month to date, as of the closing prices today, we are down approximately 70 basis points. That's mainly due to the short portfolio. We're losing about 2.8%, or in other words, the stocks and selections in the short portfolio have gone up and actually gone up significantly more than the rest of the market, which is why I think this is kind of a tricky market to navigate. If it's truly a junky kind of rally like this, history tells us that those kinds of rallies end with sharp movements downward. So it'll make, like I said, it'll make it interesting as we head into June. Our long portfolio, that's the other thing. We've been lagging here, up only 80 basis points, although much of that underperformance comes from the position that we closed earlier this week. I clocked it out at a 10% loss. Even though some of you may have gotten out with only a 2 or 3% loss. If so, your performance is somewhat better than what I'm showing here. But be that as it may, given that the instructions were to close positions at a 10% loss. I clocked it DHT at a 10% loss, and therefore we're only up 80 basis points. So net, we get a 70 basis point loss on the portfolio compared to a gain of 2.2%. Still, even though that's underperformance, I would say somewhat mission accomplished. We have 60% longs, 40% shorts this month, and so in essence, we were playing the flat line. To be down 70 basis points is a disappointment. Although, again, given that we were hedged this month, it's not a disaster from the standpoint of maintaining our significant profit lead on the market since the Millionaire Accelerator portfolio started in March. We've had 3 months now. I believe we are up just under 6% in total for those 3 months, and the market is, I believe, only up 1.5%. So there's still significant outperformance over the 3 months, even though the month of May has not gone exactly as planned. Here you see how I'm tracking the portfolio. These are the long positions. You see that DHT I clocked out, closing that position at 722 rather than where I think some of you would have closed out. Royal Caribbean is the big winner, up over 11% now. That stock actually is doing quite well after being sold off in April. That gave us the opportunity again, and that's why running the PE gap model every month. The market mispricings occur all of the time in the market, and with those mispricings, you've got an opportunity to jump in depending on where the valuation is relative to expected profit growth. And so for Royal Caribbean, it was a really good entry point. Again, that DHT is really the one thing that's holding back these positions. Alcoa, the aluminum company, and the chemical company CHMT are also underperforming. So net, we have a gain of about 80 basis points in that portfolio on the short side. And also keep in mind, back to the long positions, you are going to be closing all of the positions that we haven't already closed. And so do that on Friday morning at 10:30 Eastern time, please. The short positions, we also have a couple positions there that we closed. Again, they rallied significantly and hitting that 10% mark. ABMD actually gapped higher. Therefore, per our rules of closing a position when it hits that 10% floor, we close that one at 15% immediately after it gapped higher, even though it has settled back. So some of you, again, may, depending on when you actually took these actions, might be doing a little bit better than I'm doing here, or what I'm showing here in the portfolio. So that's really where we stand for the month of May, and frankly, it's time to move on to June. I do think, as I said, the last week of May is going to be an interesting test, if you will, of the playbook that's been demonstrated the last few months, where institutional investors have been locking in profits at the end of the month. And then, as I said, the sell in May phenomena over the last 10 years has absolutely blown away other calendar strategies. And it may or may not continue here, but again, the probabilities would suggest that at least this last week, I'm not expecting huge gains. We've had 5 or 6 straight up days in the market on very thin volume, which when you're breaking out on historical highs, you sure would like to see more enthusiasm and more volume to confirm the bullish bias. But that's really not happening. So at least for the last week of May, I think we're going to have a drift to the downside, or perhaps even worse. That would set us up nicely for June, when there's going to be a news vacuum. Earnings season is winding down, And really, other than some economic data that's going to come out, your standard monthly economic data that gets released every month, I don't think there are going to be a lot of headlines to scare the bulls. And so because of that vacuum, I think the bias is to the bullish side. And I mentioned that to you because it's going to be instructive as to how we structure our baskets and portfolio for the month of June. As always, we're going to be relying on PE gap stocks for select trading opportunities. Like I said, mispricings happen all of the time, and there's no better tool, in my opinion, than the PE gap methodology to ferret those opportunities out. And like I said, May has been somewhat of a junk rally, and because of that, I expect a reversion to the mean in June. Therefore, select shorts of overvalued stocks is going to be part of the strategy. Haven't determined yet the percentage allocations to the longs or the shorts. That's all going to get done next week, and again, presented to you on Thursday in what will be a live presentation. That ends tonight's presentation that I have for you. Really, the only news to share is that we are closing our long positions. Do that tomorrow, Friday morning, 10:30 Eastern time is when you should close those trades. That's an hour after the market. You give the market some time to settle in. Depending on, I'm not expecting a lot of volatility tomorrow, although it is the last trading day before a 3-day weekend. And so getting out in the morning, I think, is going to be prudent. And the shorts, we're going to leave those intact, keep those shorts in position. We'll go ahead and close those or buy to cover next week. And as I said, next Thursday, we'll have the live webinar laying out our portfolios for June. So that's all I have for tonight. Hope I answered any questions you might have, and if not, feel free to drop me an email. This is Jamie DeLugash for the Millionaire Accelerator, and I look forward to our live presentation next Thursday. Good night, everybody.